Then let's go ahead and get started. Again, everyone, I'm Marcia Nedlin. I'm the organizer for the Middle Neighborhoods Community of Practice. And today we have a very interesting topic. It's the first in a series we're doing about how to expand resources for middle neighborhoods beyond just federal pass-throughs from CDBG and home. And in particular today, we're very lucky to have the city manager of Des Moines, Iowa with us. And in Des Moines, Scott Sanders was very instrumental in, I don't know what the verb is, arranging it, so that significant funding for middle neighborhoods was included in the uses for sales tax increase there. And that's what we're going to talk about today. But first, I have someone behind the scenes advancing my slides. We want to just have a little quick poll about what sector you're joining us from. So if you would tell us, choose one of those and tell us where you're from. It's really the only way we have to track who's involved in middle neighborhoods. And so far, in total, it seems like we get about maybe half nonprofits and a third local governments. And the rest is mixed among other types. And this time it's as I would expect, more government than nonprofits because of what we're talking about. Okay, I think we can move on from there. I have two slides about middle neighborhoods, and then we're going to switch to Scott. The Middle Neighborhoods Initiative, for those of you who are not familiar with it, is a national initiative. We're housed in the National Community Stabilization Trust, but it's a partnered effort between them and NeighborWorks America. And it's focused on mobilizing attention on middle neighborhoods, which we generally define as neither the most distressed in your community, nor are they the healthiest. So that gives you kind of a wide range. We don't have hard and fast metrics for it, but they tend to be overlooked by philanthropy and policy because people, they're not the most distressed neighborhoods. But as those of us, a motley crew of us originally got together and compared notes, we really noticed that if you look at the long-term trends, and I think Scott will talk about that in Des Moines today, there was decline. And if we allowed that, in any city, if you allow that to continue, you're going to end up with another group of neighborhoods that are your most distressed neighborhoods. So our sort of philosophy is that if you intervene early and sort of change the trajectory of those neighborhoods, that you will maintain their health at a much lower cost. So we have a community practice. We do research or sponsor research and policy analysis and advocacy and communication strategies. You can always sign up to get on our mailing list. Actually, none of you have to. We'll put you on it because you're here. Our website is ncst.org/middle-neighborhoods. So my other slide is what is a middle neighborhood? They tend nationally overall to be mostly single-family homes that were built for families with children initially. They usually are still more than 50% owner occupied, but depending on the regional housing market, that's probably has eroded over the last 20 years. The housing stock is aging, and although it's generally in acceptable condition, it often lacks the features and updates to compete well for today's home buyers. And so what you see is that it's starting to sift more and more into investor ownership. The thing that I love about middle neighborhoods is that they're more racially, ethnically, and economically diverse than either their lower income or their higher income counterparts. So they really are this kind of place where we have the mixed income community that so many of us believe in as the strength of cities in America. So today, as I said, we have Scott Sanders. Scott is really interesting. I met Scott 5 years ago. I was part of a team that was working on strategies there that resulted in the organization that is funded today by sales tax revenue. Scott's been city manager since 2014, and before that, he was a finance director. So he's very well grounded in the nuts and bolts of administering cities, and he understands how the numbers work, which I really love about him. He's very clear about what his long-term outcomes are, why he's doing things, and why the numbers work. The other just tidbit I wanted to mention about Scott that I read when I was reading up some bio information on him is that um, I have this little quote from an article where or at least a description. It says neighborhood engagement is a major priority for Sanders, who believes that strong neighborhoods are key not only to ensuring a high quality of life, but also to helping solve the city's budgetary constraints. So that is really interesting. And he said that residential neighborhoods generate 2/3 of Des Moines' property tax revenue. So that sort of really nicely sets the table for what we're going to talk about today. So I'd like to welcome Scott, and I'm going to have him take it away with a little presentation that he has, and then we'll do some Q&A afterwards. So Scott, thank you so much for taking the time to join us.
Well, thank you for having me, Marcia. Volume okay? That
Yep.
sound good? And do you have control of this?
So yes. So Anne can advance your slides for you.
Okay. Well, thank you for that introduction as well. I think it does actually set up the presentation with some of my punchlines, some of the support documentation that I'm going to be sharing with everybody. I also appreciate this opportunity to put together a presentation like this. As you might imagine, very little is done in isolation in a city. And so what I'm going to be talking about a lot is the product Invest DSM that has come about with a lot of other studies, a lot of other work that preceded it, and then even after Invest DSM, which is now 6 years in, we have continued to move forward, and I put that on as a slide as well here, in a even more comprehensive housing initiative that the city has just adopted. And you can imagine that it brings together a lot of programming that highlights Invest DSM's work in neighborhood revitalization, but it brings together some new tools. And I think the way for this audience to understand Invest DSM is kind of that jewel in our crown that we created, and again, 2019, about 6 years ago, that had a focus on mostly single-family homes in Des Moines and within the neighborhoods, allowing others, nonprofits mostly, to deal with affordable housing and some of the other initiatives. But now we're moving into a more holistic approach. But none of the activities we're doing now with our citywide housing would even be possible if we didn't have a successful Invest DSM initiative, being able to show our residents, our elected officials, that we can be successful when we are bold and we are data driven, and we're bringing in experts from the area, and we have a very strong team. As a city manager, have a couple disqualifiers, right? So again, none of this would happen without a strong team. You're going to hear me talk a lot about collaboration. So it's not only the city team, but the Invest DSM is nonprofit. We have our county very closely with us. They're on the board, representation in Invest DSM. All our nonprofits that deal with housing are involved as well, not only Invest DSM, but other initiatives. And so I feel really proud that this is a team effort. I actually do not spend very much time with Invest DSM because it's a well-oiled machine. And I'm fighting allergies, so excuse me for this thing. And so I think I just want to make sure everybody understands I'm not taking credit for this. I had the great opportunity to help create it, help set up the funding, which is where I'm going to be focusing my conversations on. But we are also proud of what success we've seen. And in the last few slides, I'll get a chance to just kind of brag on Invest DSM. So if you want to move, go ahead and move forward. I think, you know, with other local government officials on this call, it's so crucial to allow everybody to understand a little better of context. What is the situation with housing demographics of Des Moines? What does it look like from a region and Des Moines proper? And then where are the trends? And so I am just going to spend a minute on that to make sure the context is understood. The city of Des Moines has a population of about 215,000. The metro area is about 700,000. For those that don't know, the Des Moines metro area is the fastest growing large metro area in the Midwest. So we are dealing with quite a bit of growth in the region, but those trends do not, you don't end up with the same answer for Des Moines proper. Des Moines proper is growing very slowly. The last 20 years, from the 2000 census to the 2020, the city of Des Moines grew about 7%. So not, you know, it's this nice little slow, consistent growth, but it was our suburbs growing at more than 17% a year. In fact, many of our suburbs are growing over 20% in that 20-year period. So there's quite a bit of growth going on. It gets a lot of attention. As you can imagine, that takes a lot of new construction. And so I'll be talking about some of those additional trends in the next few slides as well. I think you'll see with that map that Des Moines is geographically surrounded by our suburbs. There are 14 of those in our area. So we have a very competitive housing market. That's important to understand. This is not a situation where we found ourselves thinking about just letting the market take care of itself over time, because eventually people would find themselves living in Des Moines. There are 14 other options close by, all within 20-25-minute drives to downtown Des Moines. We are all, excuse me, we are also 90% developed within our own city boundary. So we have a very strong focus on redevelopment, rehab, revitalization. There are some opportunities yet for greenfield first-time development. But again, that's dealing with about 10% or less of our geographic area within the city. So hopefully that gives you a little bit of context with what we're dealing with. Very competitive housing market and options for our future residents that we're trying to attract. Go ahead and advance if you would. So that's kind of our metro area. That's our city. Now I'm going to go a level deeper into these neighborhoods. I think you had a very good definition of middle neighborhoods. That has been our focus for more than the past probably about 10 years. And this is a listing. Des Moines has, this is from 2018 and really had not changed for several years before that. We have 52 recognized neighborhoods in Des Moines. The color coding you're seeing is reflective of the market strength and conditions of individual single-family homes. So it's always important, data-driven. Some of the analysis we did right away preceding Invest DSM was a good inventory of what are our neighborhoods status for housing conditions, and did a 5-point scale determination, and then aggregated those by neighborhoods. So obviously the green neighborhoods are doing well with the conditions of their homes. And as you drift lower in the page, oranges and red indicate neighborhoods that are really struggling with the conditions of their housing. And a lot of that can be reflective of the age of the housing. No surprise probably to many people. Des Moines was the center of the community, had more than 70% of the metro's population back in the 1930s and 40s. And that's where a lot of the housing was still being built in Des Moines. But once you go post-World War II and get into the 70s and 80s, the trend really changed where a predominance of the new construction was happening in the suburbs. And that meant that we continuously had older and older housing here in Des Moines. Go ahead and advance if you would. Another map that shows our neighborhoods and the actual changes in valuations to the right. This one actually shows that the yellows are concerning, and most of that map is yellow, in that over that 12-year period from 2005 to 2017, a lot of our neighborhoods, again, a predominance of them, were finding it hard to be competitive in the region for potential new housing residents. And as such, on the left, this table was used quite often in the lead up to Invest DSM. Most of our neighborhoods were not able to appreciate and see higher values at the same rate of inflation year to year. So over that 12-year review period, we had only a handful of communities that were exceeding the annual inflation. And we figured that that was important, and in the sense that even an investment in your home was not giving you a good return in years later, selling it for something less than the rate of inflation. So again, hopefully that builds the stage for the situation we were dealing with. Again, this is put yourself in the mindset of about 2017. Moving into 2018, we were having these discussions about challenges with our existing programming not being able to address the valuation decline or stagnant situations that we had. And it allowed us to understand the importance of looking at the middle neighborhoods that are in the middle of each of these graphs and tables, knowing that with no intervention, with no change in policy and resources, we showed that they would drift further and further into decline. And so what we were looking at is the opportunity to influence the middle neighborhoods with additional public investments, a comprehensive approach, which I'll talk more about, and therefore leveraging not only the public money, but the commitment that the city was dedicated to these middle neighborhoods, such that the private money would then start to flow as well. And we saw that as one of the takeaways, is that if you're concerted and data-driven with good public conversations about policies, public money can then drive high ratios of private money investments right along with it. Another key takeaway with what we found through consultants and doing some inventorying is we found that our Des Moines residents, oftentimes long-time Des Moines residents, actually did have additional resources that they could put into their homes, but they were holding back on that investment because the neighborhood was in deterioration, and they didn't want to be that one house putting money into it when the rest was deteriorating. Makes perfect sense. Knowing that there was the opportunity for our residents to upgrade, but then what was happening was they were often leaving Des Moines to get to a larger house, to a newer home, newer amenities, things of that nature. And so we knew we needed to create markets within our own neighborhoods that were more competitive with the 14 suburbs that were around us. You can go ahead and advance again if you would. So essentially, understand that as a region, we're growing in this time frame, again, anywhere from about 1990s into the 2000s up to 2016, 2017. The region's employment was growing nicely. The housing was falling along with that, albeit in the suburbs, not in Des Moines proper for new homes. We got down to under 200 new homes being built in Des Moines proper annually, with the suburbs building 4 times that amount, sometimes even 5 times that amount, between the other 14 suburbs. The region's core city, as I was talking, Des Moines, however, was finding themselves in a decreasing situation, not only from the housing, but some of the jobs moving as well. So to give you again a perspective, in 2000, the population share in Des Moines was 40% of the metro area. And by 2020, 20 years later, it was down to 30%. And so today we find ourselves probably hovering slightly under 30% of the metro area. And yet, side note, we have very typical 700,000 populated metro area issues, whether that be housing or all the other social issues that come along with a large metro area. And we only have 30% or a little less of resources. The amount of local taxes is also about that 30% for the region. So we have a lot of distractions, if you will, with other non-housing issues as well. So I think that kind of covers. I want to make sure I'm checking my notes. There's that. Obviously, the new housing, not surprisingly, I should say, the new housing in the suburbs is market rate, almost exclusively. I mean, we're talking over 95% of new housing is either market rate rental or market rate ownership, and obviously all the way up through McMansions and $1 million plus housing. And so it really meant that Des Moines was left with where the affordable housing was, and people that might be struggling financially found themselves needing affordable housing. Therefore, they found themselves eventually living in Des Moines, even if they may have started out in the suburbs. There is arguably overbuilding that has occurred, but that does also have the benefit of affordability for the higher wage earners. And again, they have lots of choices with the 14 different suburbs to choose from. Okay, so now let's jump into how we found ourselves in this place where we needed to make some new bold decisions. There were 2 tracks that were developed late in 2016 and throughout all of 2017 into 18 even, that we knew we needed to bring together a team. We needed to completely redo how we were handling neighborhood revitalization. We, like everybody else, were doing similar models of bringing together home builders and banks and developers, trying to entice them to do the work. We often only brought to the table infrastructure. You know, maybe that's some additional streets and utilities, things of that nature. But the reality was, politically, with 52 neighborhoods, the resources were spread thinly, and politically, what they would say was a fair way, but not an equity, and not a way that could be measured by equity, which we all know is based more on need, and where you can focus resources, again, to leverage private money and leverage additional resources. So it was acknowledgement that what we were doing was broke. We needed to do something different. And we created these 2 tracks where we would form a team of like-minded city and county officials. Again, they've been strong partners throughout. I'll talk more about the actual funding in a second. But we also brought together our nonprofits and dealing with housing. And then we hired consultants. And so I want to do a shout out. Some of these slides actually are from some of the different reports that CZB has helped us with. Charles Bookie, if he's online watching, thank you for all your work again, Charles. But essentially, we've used him throughout, and his team been just crucial to our success and keeping us founded in, again, the data and the reality of what our situation is in Des Moines. So they were able to do a lot of the research for us, bring back inventories. They were the ones that made us aware that our Des Moines residents actually do have capacity to improve their own homes, but they were holding back from doing that. That was clearly one of the big takeaways. And then eventually we knew that if we had options that they provided, we'd be able to implement the one that we so chose. However, at the same time, we needed the second track that was really focused on funding and acknowledging that the Des Moines property taxes in the city of Des Moines were 30 to 40% higher than our suburbs. We also had capacity issues with ability to raise any of our taxes even further to pay for any investments. And so we were pretty quick to realize that we couldn't use property taxes to solve our property tax issue, which was already burdened. And so we needed to research and find a new source. Very quickly, we looked at hotel motel tax that was already being collected and distributed to other social entities and our Convention and Visitors Bureau and Bravo for our fine arts allocations. So we really couldn't tap anymore into hotel motel tax. We have things in Iowa like franchise fee for our gas and electric utility. Very helpful, but once again, we had used our full statutory authority. It happens to be a 5% tax on gas and electric bills. So that was already fully tapped, and we really didn't see an opportunity to legislatively change that as well. Therefore, what was left over is the local option sales tax in Iowa. It had been implemented or had been offered up to local cities back in the 80s. And in fact, at this time in 2016, over 90% of local governments in Iowa had the 1% local option sales tax. And they keep it within the county. What they generate within a county is distributed only within the county based on some formulas. Don't need to get into that unless somebody asks me later in Q&A. But essentially, it's locally generated and spent, and the local governments have to go through a referendum. And the referendum also requires that all contiguous cities vote together as one vote. And so with 14 suburbs, the Des Moines area had already tried this referendum several times. I think it was 5 times even, and failed. You only need 50% approval to get it done as well. But we looked at what was discussed and shared with the public in previous referendums and realized we were in a different situation, had a different opportunity to sell to the public that what we really needed were 4 things out of the sales tax. We wanted to help taxpayers with taking down some of the property tax rates with some of the money. And then we also wanted to focus on 3 service areas. Our public safety needed some additional resources. We still needed a little more towards our public infrastructure. So streets, they love to have new streets and infrastructure, of course. And then most importantly, neighborhood revitalization. And that's where Invest DSM will come in. So I'm leaving out an awful lot of detail, a lot of blood, sweat, and tears in the planning. I'll tell you one of the biggest takeaways, and it was in your quote even, is recognition that with so much of our valuation out in the neighborhoods, our tax base really in the neighborhoods, that we needed to find a way where not only did we get growth in our tax base, but we felt comfortable in talking to our neighborhood leaders and residents that it's a good thing if your valuations are going up. If you're in a community where that is taboo and you can't talk about the need to see values going up, then Invest DSM is not for you, and programming like this is not. You have to be able to get over that hurdle of being able to say, look, we want a community that is seeing growth in the equity of homeowners and business owners, property owners. And that's not a bad thing. Then you need to hold, as residents and voters, your elected officials accountable for what they're doing with any additional revenue. Are they actually taking the rate down as the values go up? Then there's a nice little middle ground there somewhere for each community to find. And so we got past that hurdle fairly early in our team conversations with the consultant as well. There was no way to hide around that, hide behind anything there. We wanted to see growth in valuations. So again, it seemed to make sense that we could utilize sales tax to then generate high growth in property values, and therefore our tax base is growing nicely. So you flick the next slide. So essentially, it led us to the analysis that CZB helped finish up in 2018. And we had a vision, if you will, of what Invest DSM might look like as a method or model for revitalizing the neighborhood. And so we were able to start putting together what the governance and bylaws might be, and the memberships and things of that nature. So we were in a pretty good place in 2018 to understand how it could work, but we still needed to know definitively the financing and the funding. And so in 2018, we went out for the vote, and it went down. It failed. And so again, by state law, the total vote of the metro area was just under 50%. So it failed. And then digging through the numbers over the couple weeks after the election, it became very apparent that Des Moines residents had voted in favor of it. And in fact, nearly 60%, I believe, was the number in that first vote in 2018 that we were having. And so we quickly pivoted to the legislature, which was still in session here in Des Moines, to maybe the rules are wrong because we're the only community area in the whole state, really, that didn't have it because we had to all vote together. And you can imagine the issue there was 14 cities had 14 different messages in the same media market. So confusion was everywhere. And so we simply asked the legislature, can we not vote independently? Every community can decide if they even want, because some of them didn't even want to vote in the first 2018 election. So it felt like it was being torpedoed to a degree by some of our suburbs. We actually got the permission of the state to go independent, turned right around for the spring of early 2019, had another vote. It turns out several other communities also did want to give it a shot, put a lot more effort. Again, I'm skipping over an awful lot of work, but we were able to get it passed in all but I believe one of the communities that tried. The key was Des Moines got it done. Des Moines was going to start collecting a significant amount of sales tax. We had at the time about a $180 million general fund annual operating budget. And the sales tax was projected conservatively to be at $35 million. And so the magnitude of $35 million on a operating of 160 or excuse me, $180 million. That's huge. That's a game changer, right? And never felt that kind of relief and awe, if you will, in our community said yes. And it was over 70%, by the way, affirmative in Des Moines, because we really nailed the public safety aspect. And then getting in, we had enough details at that point with what the neighborhood revitalization through Invest DSM could look like, that it was overwhelmingly supported. And we started collecting the revenues and actually put the governance together. So my apologies to those who may already know about the structure of InvestDSM, but I just wanted to run through a couple quick slides. I want to brag on them a little bit because, again, a lot of great work by these individuals. Again, we've stepped back once it was created, and Amber Lynch was the original executive director. She has decided to step away after, I think, 5.5 years. Hated to see her to leave, but man, what great work her and her team have done, along with their board members. Again, they now have board members from the city, the county, and a couple private individuals that sit on their board as well. Very strong group, very committed to it. So we set forth the 501c3 process. The county and city talked at length about funding of our sales tax. We decided to dedicate $5 million annually. The first year was a partial year, so I think it was $2.5 million that first year. But essentially, the commitment was to $5 million of the city's sales tax annually. And the county decided to match us. And so we were right out the gate, $10 million a year to work with, and a 5 or 6 staff person initial group to work with. Now, we made sure that city staff were involved with all the planning aspects. Again, I'm skipping a lot here, but every InvestDSM, take a step back. Go ahead and actually, if you wouldn't mind, flip to the next slide. Very specific geographic area for which we call the special investment districts. And so again, the mission of InvestDSM is to become market competitive for housing of that neighborhood. And we have other nonprofits worried and working on the affordable aspects, right? So it was always this constant, no, we don't do that. We focus on market rate and bringing the neighborhood up and choosing very specific areas because we didn't have enough resources. CZB and Charles, again, and Eric, fabulous work on his team, showing us that if you go into this neighborhood, the challenges will cost you X amount. If you go into this one, it might be less. And again, we found ourselves in the middle of the road where we wanted to tilt the momentum in a positive way with some public investments. And so of these 6 areas you see here, 4 of them are original. At the top, Oak Park, Highland Park was one of the originals. And then you drop off to the left, Franklin, Drake were also original. And down at the bottom, Columbus Park. We've since added the Union Park on the right, and down on the bottom left, north of Grand, have been added just more recently to bring us to the 6 areas. Yes, many of you are thinking probably politically, they're spread out. That's because those are ward member councils, making sure that they have some representation in the South. A side note, this is 2018. The 2020 census happened to change where the boundaries are for council members, caused a little political issues. So today our Southwest is only represented by a small portion of that Columbus Park on the bottom right. We're going to have to remedy that as we expand resources further. I'm going to take a timeout for just a second. Marcia, how am I doing on timing?
We have about 15 minutes left in our official time for this.
Thank you. That gives me an idea of how much bragging I can do on the programming itself before we get into Q&A that will allow me to go into depth with any questions people have. Go ahead and flip for you, if you will. The next slide. And so again, these are the actual programs that InvestDSM is operating. And so again, I'm mostly focused on single family homes. Block Challenge Grant is where a neighborhood comes together and does some joint improvements in typically their front yards. Think of it as windshield appeal as people are driving through a neighborhood. Might be some landscaping and things on their front porch. It's a great opportunity for the neighborhoods to actually socially come together, and they have to submit the application as a neighborhood, and then they get so much money to put investments. You're talking $5,000 6, and I think it might be limited. I'd have to check $10,000 per property at most. And so it's more of that facade and landscaping. Homeowner renovation, as you would expect. A lot of times we are dealing with the homeowners that simply need some investment. They actually have some resources themselves, but maybe not quite enough. So we work with them on what would be most impactful for improvements to their homes and give them some low interest loans and grant funding. Developers will often come in the next one and actually purchase and flip the homes. They will also do new construction. And then commercial is very limited with InvestDSM and oftentimes with a partner. We have what's called NDC, Neighborhood Development Corp here, that focuses more on commercial and maybe even apartment buildings for the larger residences as well. Rental units are part of our programming as well. We acknowledge that especially market rate rentals are very much needed in each of those areas that we were focused in to begin with. And in the community building, again, we want the social aspect of people to get to know their neighbors and actually have a little bit of money to spend as a group on maybe a neighborhood sign as you enter the neighborhood was very popular use of some of those funds. Go ahead and flip for me if you could. So again, I'm going to do this fairly quickly. Know that these numbers are in here. Incredibly impressive numbers. The last full calendar year with over 300 different projects, nearly $30 million of investment, for which only 5 was InvestDSM's. Wow, what a great ratio of $4.5 dollars for every public dollar. Go ahead and flip again for me. Over time, you're going to see the last 5 years, 2020 through 24, just impressive numbers. 1,300 projects, 76 million investment. Again, we managed to keep over $4 in the ratio of private funding for every public dollar. Go ahead and turn the slide. And I think I just got a couple of pictures there for you. So proud to drive through these neighborhoods and see these, and they're always under construction. You can always go find another new neighborhood that InvestDSM is working with. And I'll say also, it's so important to have marketing of this. So each of these have yard signs that talk about InvestDSM and your tax dollars going to these types of improvements. So we have a lot of pride in those 4 neighborhoods that they have projects like these going on. You'll see the increased value is highlighted in the bottom right. Again, that's just 7 properties, another $2.5 million evaluation increase. So it truly is building up our tax base because of that. Go ahead and flip again. I think there might be just, yeah, so this is a recent map that we have this type of data driven, acknowledging that when we drew the maps for each of our special districts, that we would know a full listing of every single family home in each district, and then be able to come up with what are the strategies and the tools that might be relevant to that particular house. Go ahead and flip another chart, right here. So this is the toolkit that we then recognized. This came after InvestDSM a couple of years later, that we recognized, okay, we're spending $5 million a year, but it's only in 4 areas. The rest of those neighborhoods, 52 of them, right, are fighting for, wait a minute, we didn't get our share. All right, we developed this. There's a toolkit that applies oftentimes to the entire city. And so depending on the need of your neighborhood, we've listed out the types of tools that might be most effective for your neighborhood. And we can get granular with this, knowing the inventory of the housing condition, and then also looking at our toolkit here to say, well, this lines up with a property maintenance code funding. We have what's called our ION, investing in our neighborhoods, which I would say now is that second jewel in our crown, right next to InvestDSM. So we're building these jewels around our crown that work together nicely. And our most recent housing strategy is going to be right there to pull along all our nonprofits Neighborhood Financial Corp. NFC is a crucial partner. We got Habitat and Home Inc., and I could go on and on. But essentially, we wanted to aggregate that information to show it here. This is one of my favorite displays that we hand out to our residents. And I think that might be it if you flip one more. Yeah. Award-winning group, right? APA, both at the national level and at the Iowa level, have recognized the work of our neighborhood activists and including Invest DSM. And I think that Marcia finishes up my presentation.
That's amazing team, an amazing presentation. Can you tell us, well, first of all, everybody type in any questions you have either in the chat or in the Q&A tab. And I've heard some rumors about expanding the amount of funding or recommendations about that. You want to tell us about that?
Yeah, are we any media on the call? No.
Yeah, I doubt it.
I have a stack just to my right, just not within arm's length of our budgetary numbers. And it's because the council has adopted their housing strategy just a couple months ago. That does call for additional investments, and Invest DSM broadly, not specifically, but broadly, magnitude of trying to double up the amount of money that's going into Invest DSM. So I'm trying to find ways to make that work. And I would say we're a matter of weeks away from having public discussions about what that would look like and how we would pay that, because we're similar to what we had before with the origination of Invest DSM. We can borrow money, but we have to figure out what source of funds are going to pay that debt service when we pay back the bonds. And so again, I'm looking at different strategies about how we could do that to double up Invest DSM. And again, it's one of 6 different strategies. Invest DSM's responsibility. Our property maintenance is going to receive some more funding. And so there's going to be what I would call wraparound services and programming. Again, very comprehensive so that we are leveraging as much private money in larger scale as well. So yes, I'm very confident we can get this done. I know where to pull this.
Very exciting. It's a lot to bite off. I mean, well, I won't go on about it because we have limited time, but I know, as the approach that Invest DSM has taken is very heavy on resident engagement and in partnership with, and by the way, everybody, they don't do loans. They're all grants that they make. So, which I find really interesting I come from a background of working in the NeighborWorks network, which came out of Federal Home Loan Bank, was all about lending. And I'll tell you something, I'm really starting to think grants are the way to go. It's much more direct, straightforward, it's less work. And Scott was really clear. I asked him in a meeting 5 or 6 years ago what his outcomes were, and he said, I want to see property values go up, valuation go up because that's his budget. And I want to see private investment generated in return. And he's getting it. So let's look at the questions here. Are there income guidelines to invest in owner-occupied single-family homes? And are there any restrictions once the investment is made?
Yeah, and again, this is where I'm going to apologize because I don't have the exact details, but there absolutely is. Amount of time that they need to stay in homes, and there are some restrictions, all of which is on our website and whatnot. So Marcia, if it's possible, we can get answers sent
Of
out to those
course,
that
we'll take care of
participate
that.
after.
It's investdsm.org, I think is their website, but I didn't even know that you had any income restrictions on receiving assistance. No,
No,
in the
no, not
special
up.
investment districts, Terry's
Yeah,
saying,
yeah.
no income restrictions.
And Marcia, you bring up a great point. One of the mindset shifts that we had to do is with the grants going to privately to homeowners is we needed to treat the housing inventory in Des Moines as another community asset,
Yes.
not dissimilar to the street utilities and things that we invest in. If we don't take ownership in that, look, our current residents are just residents, taking care of that building at this moment in time. They're going to sell it, whatever. But it's okay for public money to go into private property as long as we're showing how it builds a tax base, how long term it actually does pay back, and it builds so many other advantages to the
So
community.
many. Yeah. So my understanding, I was around for some of the initial planning of this, is that, this is about preserving and strengthening an asset for the city. It's
Mhm.
not, the city also has affordable housing strategies. This is not that, right?
Correct.
Um, and then another question is, could you say a little bit more about how you selected the districts for inclusion in the initiative?
Yeah. And as you might imagine, again, it was very political at the final decision, but we always started with the data. So working with Charles and his team, we presented options and recommendations to the council, the city council, and said, look, these are the 6 or 8 that we think would make the most sense. And we need to get down to 4 from an affordability standpoint. And so, if I recall correctly, 2 agreed to the ones we chose within the ward politics. There's 4 ward politics. 2 asked for slight adjustments, and we ended up with different neighborhoods for them. But they were in the mix of neighborhoods that were applicable, that made sense. We had to put our foot down. We could not, and again, you just mentioned it's not focused on affordability, so we could not go into the worst neighborhoods in the sense of condition. And it was hundreds of millions of dollars. And so we needed to hold off on addressing them.
Yeah, as an outside observer, it seemed to me that the search was for places with the amount of revenue available that outcomes could be achieved in a time frame that was meaningful to residents, to the city, to the county as
Mhm.
investors. So
And the payback and tax growth. Yep.
that's right. And
Mhm.
so that kind of drove them to err on the side of being smaller rather than larger, because they wanted to be able to pull off that momentum and that spin-off investment in this reasonable time frame. And it's really, I think, allowed them then to entertain taking on more areas,
Yep.
right?
In the early years, we had to find other ways to invest outside of the 4 districts for the neighborhoods. And one of the initiatives that was getting $3.5 million, not a whole lot less than Invest DSM, was removal of blight. And
Mhm,
so we
mhm,
had over 1,000 single family homes that were identified as potential blight. They didn't all need to be demoed, but they
mhm.
were definitely on the verge, and over half of them were demoed over several years. So yeah, we had
Yeah.
pro-
We have a question here, and some example comes to my mind, Scott. We'll see what you say. Can you share more about the impact this has on fighting displacement for legacy homeowners?
well, I think you got to start, and I hope this kind of answers the questions. You got to start with, again, we want our residents to stay in Des Moines, and we like to give them options to do so within the same neighborhood.
Mhm.
And so we learned pretty quickly that we use the word mix. So it's
Yeah.
mix of building type, because again, as people age, they looking for those ranches, the building type and price points. And so that way you're hitting on people aging in place, walkability, familiarity, and really buy into the entire neighborhood. So one thing, and man, this is a balance, especially people on this call would understand this, right? You can't talk about gentrification. That's a nasty word. And yet the reality is we need appreciation at the same time.
Mhm.
So it's not at the extremes, but there has to be a middle ground recognition. Some people will need to move. Let's give them choices within the same neighborhood. And
Mhm.
that's actually more in the version 2 that we're now moving into with the housing strategy comprehensively is that when we do a whole block redevelopment, so you can invite me back later in a couple of years when
Yeah,
this one,
you got it.
but suddenly it does address all affordability. It again addresses the negativity that could come with higher values. Hopefully
You
that,
know, well, I would also add that from my perspective, like the opportunity to do home repairs and updates,
Mhm.
I have seen in other places that seniors in particular, um, might otherwise be overwhelmed by the need to do those and be talked into selling their house to an investor or something else because they can't age in place, because they can't figure out financially and technically how to do
Yeah,
those repairs. And then I'm also thinking of the project that Invest DSM did. I think, didn't it or do some sort of complex, maybe purchase and transfer of maybe 10 homes on a block that had been owned by a faith-based institution.
recently.
They were running them as rental properties. They were, as I remember it from interviewing the person at the faith-based institution, they were way in over their heads financially on these. And I think those would have been lost and demoed if Invest DSM hadn't intervened. What happened with those?
Yeah, so that's underway and that is pretty recent. So they have purchased those and yeah, and so unfortunately, they were under cases through our nuisance
I bet
department
they
as well.
were.
So they had gotten so bad that they were being notified of necessary improvements. Not all of them, but more than half. And so, yeah, that was an opportunity to intervene. Invest DSM was able to intervene with their resources. And I know some of those properties are moving forward with improvements, but it is a slow grind to
Yeah, it is a
understand.
big tough.
Yep, and you have to do the planning. I kind of went over that fast, but again, you have to have a purpose for the special interest or the district, and it has to fit into that. Are we trying to attract younger families? Because it's not every neighborhood has the same goals.
Yeah,
Um, and
true.
I do want to say that again with the along its side, the second jewel we put in is invest our neighborhoods. So they are focused on a lot of our elderly residents, homeowners that simply want to stay in their home to the end of life or get through the next 10 years, that kind of thing. And so we have loan programs where 0% interest loans where and grants in combination where they can improve their home, stay in their home, have improved quality of life because the roof is fixed, the porch is fixed, stay there comfortably. And when the time is right, when they sell, we get our money back and it goes into another hand. So we're trying to isolate different clientele, different resident needs, and create programs that work for them and offer that up. We have what are called just liaisons, and that's all they do is talk to residents about their needs. And then they talk to them about, well, did you know your property needs to address the broken window, needs to address the sloped porch? And we have resources to help you with that. It's fun to watch these people work. Ion is just another glowing example of Des Moines leaning forward on that
That's
initiative.
great. When Jim Wheaton asks about the increase in property taxes because of assessed values for
Mhm.
those most vulnerable, perhaps residents, are there tax exemptions for elderly in the state of Ohio or?
In Iowa, yeah, there is, but it's rarely used.
Oh,
And so we have to look at it right from um, holistically because some of the residents we work with maybe inherited the house, and
yes.
so they don't have the resources to keep it up and maintain it, and therefore they've gotten to a place where our nuisance inspectors are saying, look, you do need the property maintenance, you do need to take care of this issue. Do you need to work with us on some funding? And then our staff are working through at the end of the day, there is abatement. So it's a temporary holding back of the taxes, right?
Mhm.
But eventually they will have to pay additional taxes. We have had a handful, not a lot, where when we sit down with them and see what their finances are, quite frankly, they shouldn't be living in a house in an ownership situation. And again, as managers, we have to be comfortable saying that publicly.
Yeah.
Not everybody should own a home, right? And in fact,
Right.
I would tell you the trend is horrible when you actually look at the numbers of should 80% AMI still own a home versus 70 versus 60. And I will tell you, the line breaks somewhere in there. If
Yeah.
you're dealing with 50% AMI in Des Moines, Iowa, you should not be looking at home ownership
Yeah.
because you may have help getting into the home, but you're setting them up for failure if they don't have the resources to then fix that $1,000 issue that comes along. And if we're not dealing in reality of um, somebody has to pay for that, and if they're just dependent on coming back to public money for fixes, we've set them up for failure. It's about the long-term maintenance as well.
Yeah. Yeah. And we should point out, I mean, you covered something about the regional economy in the beginning, but I think Des Moines is like one of the most affordable cities of its
Mhm,
size in the country, right? So
mhm.
this is a place where property values have been low enough that it inhibits reinvestment. There comes a point at which um, people are, if they don't feel like they're going to get back what they invest in the maintenance and improvement of their homes, they're just going to withhold. And that's a downward spiral. Um, and it is that tricky place because in this country, we have a gap between the median wage and the median cost of housing, and that exists, period,
Getting
everywhere.
worse.
Yes, it's getting worse. And so um, we know that that exists. Also, what exists is that if we are not able to have property values at a certain level in our housing stock, investors won't maintain their good rental properties, homeowners won't invest to maintain them. It just is the way this country is set up right now.
And
Um,
retail won't come in.
that's right. And retail won't come in, et cetera. So I'm sure everybody in this call has thought about these things and had to balance them, but it's definitely something that in Des Moines they think about very carefully. And as Scott pointed out, they have a whole suite of programs to address neighborhoods and affordable housing. Um, what happened with their sales tax revenue and Invest DSM filled a gap in programming that they didn't have before, I think. So we need to wrap up. I'm sorry, we could talk about this forever. I think maybe you have a couple of slides for me, Anne. Well, by the way, everyone, we are going to send you the slide deck and the recording link for this webinar so that you can share it with others. Um, and then I wanted to let you know that we have a couple more webinars coming up on September 25th. It'll be Expanding Resources Part 2. And in this case, we're going to have the cities of Chicago and Philadelphia talking about their bond issues that are investing millions in middle neighborhoods. So that will be another interesting look at how to get funds that are not just federal pass-throughs. And then we haven't quite nailed down the date, but the final one so far will be about general revenue and two cities who actually invest general revenue in their in strategies that benefit middle neighborhoods. So watch your email for registration announcements about that. Follow us at LinkedIn. We're there. We announce all of our stuff there. And email us if you have any ideas for additional webinars, case studies, anything you'd like to see from us. Check out our partner at Center for Community Progress, their Cornerstone webinar series, which is a great series. And then you'll get an evaluation as well today. So I'm seeing a lot of positive feedback for you, Scott, in the chat. And it was certainly, you just totally nailed everything that I was hoping you would talk about. I'm really so impressed. I've been able to watch your progress around this a little bit closer than the average person who doesn't live there. And I'm just thrilled with it. So thank you so much for taking the time with us. We really appreciate it. And we wish you every success as you continue with this work.
Well, thank you for having me. Again, it's a team.
That's right, it is. Okay, take care.
Uh,
Bye, everyone.